So that leads me to sector spotlight, because these momentum stocks are where some of the longs are hiding. They've been acting very well. Yesterday, the market was led by Apple. First it was up, it broke through yesterday's low, accelerated down for cash flow. Some traders made money short, but then it regrouped again, and it continues to hold that earnings gap. So for Apple, it's down about $2 today. I would make sure you watch this area. They're trying to beat it down, beat it into it. It gave back its 10-day moving average, but it's still above the 20, and it's well above that breakout area that we saw, back at 364. So sometimes, even the best of the best stocks pull in. So what I want you to watch is the 20-day, okay, and then potentially, if we come all the way down to retest that prior high, but the market's going to have to get, pretty ugly for that to happen. So I'm going to continue to see if we hold support 1, which we are, or we go to the 20-day or the 50-day, and that'll give me a barometer on how bad this correction is getting. And the same thing when you look at something like Amazon. Amazon's been one of the key stocks, very strong, not as strong as Apple because it's already down to the 20-day, but I want you to continue watching it. If you look here on Amazon, you'll see that it already gave in the 10-day, it gave in the 20-day, and it did hold that prior breakout. So this trade was a bit different yesterday. It came down, retested that area, and held. So this is your new pivot to trade against. This is one of the chosen ones, but even the chosen ones can correct. If it gets below this area, watch the 50-day. It's not uncommon for even the strongest stocks to come into the 50-day, especially considering the indices are going below their 200-day. So if you want to take a look at Google, it also went down and then had a nice reversal for traders and for investors who are looking to buy the dip. If you look here, since the earnings, it's been acting really well. It gave back its 10-day moving average. It held the 20-day. It also pierced into this big earnings gap, and it's still in the game. This is a stock that's very strong. This is one of those go-to stocks when this market environment gets a little bit better. Baidu, also one of the growth areas which people are turning to, one of the best of the best. It is also coming in, which rightly so. It could hold its 20-day or 50-day and still be intact. So if you look here on Baidu, you will see that it broke this level, which was the prior high. It broke the 20-day, but held this lower support. So the key is you need to know where each level is. You need to know where support 1, 2, and 3 is if you're trading against it. If you're looking to invest when you're in a market correction, I don't think you put anything more than tier 1, even the best of the best, because as you could see, they still come in, and I think you can continue to wait. What you want to do as an investor, you want to wait for a formula to develop. You want to see a reversal day like we saw yesterday, and then you want to see a follow-through day with at least 1% gain on a heavy volume within 4 to 7 days later to give you a green light that a new rally has even started. So as an investor, cash is king. We've been talking about cash being king for the past week or so, and you could have saved yourself about 5% as a trader. Make sure you have those moving averages in front of you. Know your levels because this market is acting quick. I'll come back in the trenches with you right after this commercial break.